important news for all Tesla stock owners. It might be time to sell. Hear what experts say in today's video. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. A key analyst lowered the price target for Tesla stock this Thursday. Meanwhile, scrutiny of Elon Musk has racked up since he took over Twitter, with President Joe Biden suggesting Wednesday the foreign investment in Musk's Twitter purchase was worth being looked at. Wedbush analyst Daniel Ives, who has long been bullish on Tesla, lowered the firm's price target for Tesla stock from $300 to $250. This reflects a lower multiple associated with the Musk overhang that gets worse by the day. Ives wrote, "Sitting on top of the peak of the mountain with Tesla in a massive position of strength, Musk has managed to do what the bears have unsuccessfully tried for years," Ives wrote. "Crush Tesla's stock by his own doing in what we view as a purely painful dark situation." Tesla stock slipped 2% early, before spiking 7.4% to 190.67 following inflation data in Thursday's market trading. Shares fell 7.2% to 177.59 Wednesday, undercutting 2021 lows. Shares are down more than 40% on the year, according to MarketSmith analysis. Elon Musk disclosed Tuesday evening that he had sold shares worth $4 billion in the first 2 weeks of November, coming after he completed his $4 billion Twitter deal. Tesla stock has a composite rating of 44 out of 99 shares. That's a dismal 15 relative strength rating. The EPS rating for Tesla stock is 75 shares and could also be falling along with other China-exposed stocks in the wake of stepped-up COVID lockdowns there. In an attempt to woo customers in China, Tesla brought back an insurance subsidy Tuesday for vehicles purchased through year-end. This followed a price cut in late October as the EV giant tries to boost demand amid soaring production in China. Musk took over Twitter on October 28. The Tesla CEO slashed roughly half of the social media site's staff while tweeting frequently about his plans and politics. Musk has also responded personally to customer complaints and suggestions. Ives said Thursday there are real concerns that Musk is distracted from running Tesla. The analyst added there are worries he could be hurting his image, which could spill over to Tesla's brand. Tesla stock has shed around 25% since October 28. This is a pivotal few months ahead as the Twitter circus show is slowly starting to impact the pristine EV brand of Tesla, and this could impact demand down the road in this EV arms race, Ives wrote. And just before we continue, we're giving away a $50 Amazon gift card every single day. You just need to subscribe to the channel, like this video, and get the bell on. Also, comment at Love Trade Daily to lock in your entry. Winners will be contacted privately. Good luck. Now let's not waste another second and get right back into the video. The Wedbush analyst added it is a dark comedy show with Twitter, and that Musk has essentially tarnished the Tesla story / stock and is starting to potentially impact the Tesla brand with this ongoing Twitter train wreck disaster. Twitter users have complained a lot about Elon Musk's early moves after taking control of the social network, but their complaints seem tiny compared with what Tesla Inc. investors have had to suffer. As the U.S. focused on election returns Tuesday evening, Tesla chief executive Musk tried to slip through disclosure of his long-awaited stock sales, revealing that he had sold nearly $4 billion of Tesla stock in the previous 3 trading sessions. Musk did not publicly address the stock sales nor his intentions to sell more within 24 hours of the disclosure, even while tweeting roughly 20 times in that period. The sales fueled a further downturn in shares of the electric vehicle maker on Wednesday, when the stock fell 7.2% to $177.59, its lowest closing price since November 2020. Tesla is currently down 49.6% on the year, which would be far and away the worst year yet for the stock. The previous record annual decline was 2016, when it fell 11%. The problems for Tesla investors go far beyond Musk selling its stock so that he could overpay for a company with limited growth prospects and a host of other problems, but the poor optics certainly start there. He sold caviar to buy a 2-slice of pizza, said Dan Ives, a Wedbush securities analyst. Ives was one of several on Wall Street to predict Musk would need to sell more shares to either close a gap in his financing of the $4 billion deal to buy the social media company, or provide additional operating funds. In a telephone conversation Wednesday, he said the Twitter move is a nightmare that just won't end for Tesla investors. One reason it isn't ending is that Musk's need for cash in relation to Twitter is not done with the recent sales, portending more in the future. Musk said in a tweet late last week that Twitter had a massive drop in revenue due to activists pressuring advertisers to pull their ads, and he will have to continue paying the employees he did not lay off while servicing a debt load that analysts have estimated will cost him $1 billion a year, much more than Twitter has cleared in profit in the past 2 years. Twitter reported a net loss of $221 million in 2021 and a net loss of $1.13 billion for 2020. The first 2 weeks of ownership have been a Friday the 13th horror show, Ives said, adding that the verification plan and mass layoffs of 50% of employees, and then trying to rehire some of the engineers, developers, and cybersecurity experts was really stupid. And according to CNBC, the first 2 weeks of ownership have been a Friday the 13th horror show, Ives said, adding that the verification plan and mass layoffs of 50% of employees, and then trying to rehire some of the engineers, developers, and cybersecurity experts was really stupid. And according to CNBC, Musk has also pulled more than 50 Tesla engineers, many from the autopilot team, to work at Twitter, but it's consistent with how this thing has been handled, Ives said, adding that Musk is way over his skis with the Twitter acquisition. Amid all the chaos of his first 2 weeks running Twitter, how much time has Musk had to run his other companies? Musk was already splitting his Tesla time with SpaceX, the Boring Company, Neuralink, and many other endeavors, and now he has taken on the gargantuan task of turning a social media company that has never been highly profitable nor valuable into something worth the $44 billion he paid. The effort, Ives said, has tarnished his brand, which in turn has a big risk of hurting Tesla. Many investors have bought into the Tesla story because they believe Musk is a genius and they back his vision of electrifying the automotive industry. Twitter does not meld into that vision except as a platform to spout his opinions, vitriol, and promote more wacky concepts. Since Musk began his quest to buy the company, he has endured more criticism than ever before, with even some fans starting to throw shade or question his decisions. Investor Gary Black, managing partner of the Future Fund LLC, for example, pointed out that Tesla's top engineers should not be running Twitter, where the news was getting worse. Tesla is not a company that can just run itself at this point. Musk has claimed he did not want to be chief executive, but that there was no one else to take over the car company, which is why he has served as CEO for years. It's not clear, though, how much effort he actually has made at trying to recruit someone. Now, as Tesla faces its usual multitude of issues, he is all spending his time trying to turn Twitter into a payments company, or maybe a subscription company, or maybe an everything app, or whatever he comes up with tomorrow. Musk needs to look in the mirror and end this constant merry-go-round of Twitter overhang on the Tesla story, with his focus back on the golden child Tesla, which needs his time more than ever given the soft macro, production/delivery issues in China, and EV competition increasing from all corners of the globe. Ives wrote in a note Wednesday in which he reiterated an outperform rating on Tesla stock. On Thursday, after this column was originally published, Ives took Tesla off Wedbush's Best New Ideas list. He wrote that the near-term view of the stock is increasingly becoming more challenged, citing the ongoing Twitter train wreck disaster. For Twitter to reach anywhere close to the valuation Musk paid for it, it's going to need a ton of attention from a focused leader. But how can Musk be that leader and give Tesla the attention it deserves? The answer is he cannot, and is very likely to give the attention that Tesla needs to Twitter instead, after committing $44 billion to that endeavor. Tesla investors will be left staring at the sea of red that this year has wrought, and wondering if its leader is about to sell more shares to fund his other effort. But one expert who continues to believe in Elon is Cathie Wood. But if she heard what President Joe Biden said when asked to comment on Elon Musk, even she might jump ship. Find out what happened in this video here, and thanks for watching. And don't forget, this is news, not investment advice.
And with that, we've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards. And we'll see you in the next video. If you want more crazy trade news, how about this video we did?